And good evening, everybody. I'm Michael Filighera. I am with logicalsignals.com, and this is the Elliott Wave update for the NQ from Monday, April 12th, 2021. Again, we had a very range-bound market again today, similar to what we saw on Friday. We did not move to a new high above 13,841, as I had indicated that we needed to do on last week's last update. And what that really makes me feel is, as I'm watching what unfolds, and you can see just this sideways range-bound move with a slight move lower, but basically being held by the hourly 50 moving average, 50-day moving average. I have gone ahead and I have put the end of wave 3 here. Now, my original indication, and it still may happen, just not sure how that's going to all fit into the current count, but we could just pop and get above 13,900, which is the current high. Now, if it does that, I'm now more comfortable feeling that really what's happening is that we finished 3, we finished 4, and now we've entered into minor wave 5 of intermediate wave 5 of what I believe is going to be the end of the entire sequence. And now if I go out to my hourly, here we have primary 4. And what we're looking for here is that what we're counting up is the last move up to finish the cycle wave 3. And if you remember, originally, I had felt that cycle 3 ended here. And obviously the market let us know through what it's doing that that was not the case. And so we broadened this intermediate degree move a little bit higher, and we put intermediate wave 3 here, intermediate wave 4 here. So that puts us into intermediate wave 5, which again, I'll go up one more time so that we can see that. I'm going to go up to the weekly chart so that we can see that's primary 4. We're finishing a primary 5th wave, which in turn will now complete that cycle degree 3rd wave and set the stage for a fairly large correction. Now, what is this playing against? This is playing against, we're getting ready to enter into earnings season for first quarter. And essentially what we have is that they're already anticipating that the banks are all going to report fantastic earnings and kind of just blow the doors off. That's going to produce some upward momentum. Then we have Apple, Amazon, Chipotle, Google, Facebook, Microsoft, Intel. We have a lot of tech stocks. They're not expected to have suffered during the first quarter. In fact, they are being foretold that they did good business and that we should expect satisfactory, if not good, earnings from the major high-tech companies, the titans of the technology sector. If we get to the top here, so which is what we're attempting to count, then we need to kind of think about how we're doing it. Now, I'm already anticipating that this minor 5th wave is going to subdivide into its own 5-way structure, just like we saw happen within wave 3. And we saw it happen within wave 1. So there's no reason to believe that that's not going to happen again in wave 5. So now I have gone ahead and put out some Fibonacci's. Now, what we already have in place is our original calculations for what we believe that the primary 5th wave can do. And so now I'm just going to start moving this down so we can start to see where we are and what could possibly be happening. Because now what I'm looking for is a cluster of Fibonacci levels or points that could possibly complete this primary 5th wave and set the stage for a continued decline. So What we have is a very minimal move now that will find resistance at 13,937. That does move us to a new all-time high. So in all respects, it could complete the whole cycle. I don't believe that that is going to be the case. If this is wave one and we're now just kind of tracing out a small, minute wave two decline, to finish, then I would not expect much more than a drop back down towards, or to get below 13,732 before we get into a third wave. Once again, even in a small, minute third wave, I'm going to be looking for it to pick up some speed and to really start to move to the upside. That being the case, I would suspect that this is going to just disappear. It's going to exist, maybe provide a pause, but it will not really stop anything. And that's when I expect that we're going to get that move above 14,000. Now, 14,000 in and of itself is and should provide, as a big round number, some resistance, a point where sellers will be like, okay, that's enough, I'm going to sell. That's also going to be based on what's pushing it up to that level. We may still see some selling there, but it may just be totally absorbed because we have an earnings report or a couple of earnings reports that are just pushing. So our next firmer resistance is going to come in at 0.382 of this third wave. And that would be, the fifth would be 0.382 of this third wave. And that's kind of, an acceptable level. And that's 14,117. Now, that, in my view, is the low point of a zone that seems to be building here. Now, we had previously a 618 where the primary fifth wave would be 0.618 of the previous larger third. And if that's the case, then we are likely going to see a move to 14,209 or 210. So up in that zone. And that's midway now between this entire zone. Because right above all of that, at 14,262, we have additional Fibonacci resistance. And that would be where, in the internals here, is that this minor wave 5 would be 50% of wave 3. Now, could it go higher? Of course it can. So none of this is cast in stone. This just gives us some indications of where we feel. But that would be a top end of a zone. If it breaks significantly above that zone, where, not just comes up, comes back and pulls back below, but breaks and closes above this zone, then we start to build our next level or our next zone for completion. And that comes in at the beginning. We have 618 or 0.618 resistance at 14,407.410. Now, that we called that the top end of this zone, but it's actually the bottom end of the next zone. So it could reach, but if it goes up and through it, then we have the next zone that goes from 14,407, actually we can call it 410, all the way up to 14,514, but we'll move it up to 15, but somewhere in that area, with a very small additional level at 14,492. So that's our next zone. So here is the first zone, right? And we actually could just put the first zone right into here. The second zone is, again, this 618, but that's of the internal move, where this 618 is of this larger move. And that then forms the next zone, which is 14,407 to 14,514. Now, is there more above that? Yep, there sure is. And that gives us our next zone, which is basically, I think, going to come in above all of this. Now, it's a little dark, so you can't see it. I'm sorry, so I'm just going to say it. It's 14,613, then 14,754, and ultimately, wave 5 would equal wave 3 at 14,876. So that's pretty high, and that's still, that's 1,000 points, approximately 1,000 points from where we are. And that would be a tremendous boost to the market, and it would be a blow off. And again, the size of the degree that we're completing here, if we get up there, is a cycle level third wave. So a blow off is not really out of this world, so to speak. It's very possible that it can get up there and it can do that. Now, what's it going to take? Pretty much blowout earnings from everybody under the sun here, in my humble opinion. Can it do it? Yes. We've seen stranger things happen in the NASDAQ. We've seen the buyers fled back in. They are subsequently a little bit missing in action since last week. Since we reached this top here at 13,841, they've kind of been missing in action. We've seen little spurts of them. We saw it again today on the close, but nothing like we have seen in the past. So I'm kind of thinking that what we're now waiting on, what buyers are now waiting on, are earnings reports. So we might continue to have some range-bound trading until we start to get Alcoa reports on the 15th, the banks report this week, and then we'll start to see the flood start to come rolling in, with the majority of our bigger tech companies reporting towards the end of the month. And that's just basically a week and a half away. So for tomorrow, pull this all back down. So we have our upside. For tomorrow, we need to continue to allow for this corrective phase here, very small, but corrective. Let me take it down to the 30-minute. That might show it a little clearer. So you can see not a whole lot of activity, just kind of very range bound. I believe volumes were a little bit lower again today. Nothing really to push it in one way or the other. It was kind of held lower because the balance of the indexes, the Dow and the S&P, were moving through a corrective phase as well, the bulk of which the NASDAQ did last week on Friday. So that being the case, we actually moved back down lower. We put in the new low on this morning, but the bulk of this was done on Friday and then in the Globex session. But if we break above 13,842, that's going to give us an indication that the correction is over, and I would put a wave 1 here and a wave 2 here, and that we're starting to blast off in that wave 3. Now, I really would be expecting that the buyers are going to be extremely present. It's not just going to ramble slightly higher and pause and slightly higher. There has to be a push to get it going and to get it up. What that's going to be, anybody's guess at this point. Could be economic figures, could be some move in a different particular stock. There's news is going to be continuing to come out across the board, and that, of course, is going to have a little bit of a pull on the NASDAQ, particularly if it comes in Apple, if it comes in Amazon. These stocks are still highly favored out there. Microsoft continues to be favored. Intel continues to be favored. Google continues to be favored. Facebook continues to be favored. These stocks are to be pushed, and they're likely to rise again. We, of course, see some selling because it's just happening across the board, but they may provide some support for us to get up and to really start to move higher. We have, again, so downside, we're going to continue to follow our moving averages. So excuse me, we have the 50, and then we have the 200. Again, this is on the 30-minute chart. So on the hourly chart, they're going to be a little bit different in different levels. But I would not expect this decline to come all the way back down here. If it does, then I'm going to have to revisit exactly what is going on off of this high. So my expectation is that it should not come back down here and test this level or drop below this level. Can it? Of course. And again, when and if it does happen, we continue to trade what's in front of us. So we're not going to be fighting this thinking like, oh no, it can't be down there, so I'm going to have to buy it. That would be not good trading. Good trading is going to tell us that we will follow what the market is telling us to do, and we will pay attention to our moving averages all the way down the line. from the hourly, et cetera, et cetera. And then as the move progresses, we'll be able to fill in the blanks. But right now, I'm looking for maybe it could come back down and retest 13,732, maybe dip a little bit again below that. It doesn't have to, could equal it and then go. Now, if it continues to go immediately, first resistance it has is sitting right there. And you can see it, it's a 50% of that larger move at 13,827. So far, that's basically held across the board. So we would look for it to go above that and then begin to head towards the high at 13,900.50, breaking that high, and then get up towards here. We may have pullbacks, but again, I'm thinking that when this really gets going, they're going to be shallow. They're not going to be anything really significant. But again, play it intraday according to your moving averages and to what the market is doing. And that's where I'm going to leave it for right now. Have a good trading day tomorrow. Next update will be on Tuesday, the 13th.